Hello, everybody. Welcome back to City Speak. I'm your host, Clarence Anthony, CEO and Executive Director of the National League of Cities. City Speak gives listeners an insider's view of what local leadership in America means today and features conversations with government leaders and policy experts regarding the biggest issues and challenges facing America's cities, towns, and villages. And today, we have a special guest who happens to be a really good friend of mine, and he is an amazing CEO of Build America Mutual, a firm that is really here to help city leaders to be able to insure their municipal bonds so that they can get these projects done a lot quicker and more efficiently and on time. Joining me today on the pod is my friend, Seán McCarthy, CEO of Build America Mutual. Good afternoon, Seán.
Clarence, it's great to be here. Thank you for having me on this podcast.
Oh, it is great to have you on the podcast. And this is going to be so easy, listeners, because Seán and I know each other for years. I truly am an admirer of his leadership, the way in which that he has build America Mutual. We're just going to call it BAM. Because BAM works with cities, towns, and villages preparing to sell municipal bonds to finance their infrastructure plans for decades into the future. And it's fair to say that every municipality in America will eventually enter the municipal bond market. However, for a lot of local leaders, the municipal bond market is not something they usually think about. And I can tell you that because as a former mayor, I ran for office to deal with crime. I ran for office to deal with infrastructure. But the issue of municipal bonds never came up in the campaign, Seán. So today, we're going to have this conversation so that municipal leaders will know when they start talking about structuring municipal bonds, they will have some sense of what it means. But, the first thing I always ask my guests is about their why. Why do you do what you do, and why have you built your career around municipal finance?
Clarence, it's a funny thing. I've been interested in municipal finance since I was in college. I worked for my home state senator, Ed Muskie in Washington, went to Georgetown University and was very actively involved in really what was, financing at a fundamental level of the great state of Maine. I started my career at E.F. Hutton, which no longer exists, but was one of the really forerunners of public finance at the time. And public finance started out as a branch of corporate finance, serving municipalities and state and local governments back in the 80s. One of the things I have taken from this business, though, is really the joy that you can make a difference. When I'm driving down the road and I can point to a hospital or a road that I have helped finance, and I can turn around as my kids were sitting in the back of the car and say, you know what? We helped build that. There's just something about that was just amazing. Although my youngest daughter, when I said that once, we were driving by the U.S. Tennis Center in Queens, and I said, we helped build that. And she looked at me and said, Dad, well, then why don't we get tickets? I said, well, that's not really part of it, but it's been a core part of our business. And I think it gives you an opportunity to do good while doing well.
It's interesting that oftentimes in your work, you try to put a face on the outcome of what you do. And you use the word service a couple of times. How do you see your role and BAM as a service provider to cities?
So, it's interesting, right in our corporate goals, we declare ourselves as our ultimate role is as a utility to serve the municipal cities, states, counties, towns, and villages that finance, but also to be a utility for them, so that we are here to serve that market. The bankers that sell the bonds, the MAs that advise municipalities in their role. But the key, I think, for BAM is to to lower the cost of funding and to help access the market, regardless of how small a municipality or a project is or how large it is. Oftentimes, we are part and parcel of transactions that are multiple billion-dollar transactions that are transformative.
I think that that is so important because one of the things that, again, not understanding as a municipal official this market, to hear you say it doesn't matter the size of the city, the potential to use municipal finance as a tool to achieve your goal for your residents and your community is there for all size cities. It's just not the New York cities. It's my hometown of 9,000 people. Structuring a deal that it may cost me a lot more to pay that bond readiness cost, but it is in fact available for all cities.
You're exactly right, Clarence. One of the things that people, fail to appreciate is the idea that state and local governments finance 85% of what you think of as infrastructure. So it's the roads, it's the schools, it's the hospitals, it's the town hall, it's really the financing backbone for state and local governments. And increasingly, that responsibility falls on those localities and not the federal government. In fact, right after, and I would say the federal government did a great job of stepping up and providing funding when COVID hit, and it was really unsure of where things were going. But that federal sort of blanket around the entire municipal finance market has really dropped away. And so the responsibility for putting these transactions together, repairing existing infrastructure, and bringing new infrastructure to market really falls on local government.
Yeah, and that's a very important point for our listeners. And you think about the partnership with the National League of Cities. It started in 2012 as an enterprise partner, and that endorsement of BAM was an important thing for the National League of Cities. Why did you think it was important to have that partnership between BAM and the National League of Cities?
So it's been integral, and of course, Clarence, yourself have been an active leader in making this a reality. I'll explain it this way: Build America Mutual (BAM) is a different kind of company. Our stakeholders, the people who, in essence, own the company, are the cities, towns, and villages that take our insurance. When you take our insurance, you become a member. We have 6,500 members now, and we have guaranteed $185 billion worth of transactions in 14 years. Now, that means that we have one thing in mind, one goal, which is to lower the cost of funds and to be the partner of the state and local governments that are taking our insurance. We are there until the last bond payment is made. And so that's a fundamental partnership that's different than partnering with a private corporation or even a public corporation. As a mutual insurance company, much like the goals for the NLC, are they're paralleled in terms of making state and local government stronger, have access to the capital markets. That's our goal.
Yeah, and I do think that municipal leaders that are members of NLC and of the 19,000, I think they recognize who BAM is and what you have done, and look forward to utilizing that coverage because it does make a difference to be able to understand this market. As we look at the last couple of years and look at the headlines around the market related to municipal bonds, 24 and 25 was record year. 26 is ahead of pace. What's going on with the bond market, municipal bond market, and why is it happening? And why is it important for municipal leaders to understand what's going on?
So, this comes back to the point that I made a little bit earlier that uh, the responsibility for raising funds and building essential infrastructure sits at the state and local government level. So, if you compare what the growth of that market has been, in 2009, public construction was about $314 billion. Compare that to last year, 2025, that same amount of commitment was $517 billion. So more than an 85% growth over that period of time, participation of state and local governments in order to make these projects a reality. So we see that continuing in 2026, where we're likely to have another record volume year. Now, that is because the demand for building these essential infrastructure and in repairing the ones that already are there is fundamentally financed through the municipal bond market.
Now, if we talk about the financing in the bond market and we look at what we hear in Washington, D.C. so much about the debt crisis facing the federal government, should city leaders be concerned that they could end up in the same position as the federal government?
I think all good city leaders should constantly, putting your budget together is not a one and done affair. You really have to make sure that once you've approved your budget, you are looking and you're working with your team to make sure that you understand where the revenues are coming in, whether it's property tax or income tax or special revenues that sales tax of certain kinds. So all of those things are the resources for you to come to the market. And so the issue really falls on good stewardship and leadership at the state and local level in order to identify the right projects and communicate with your taxpayers, with the people in your community. I can't emphasize this enough. The people who are very successful at accessing the markets are great communicators of what their vision is in terms of they want to build schools, they want to make the roads better, they want to have a better hospital. Those are the fundamental things that the people in each community get behind, especially if they understand and appreciate what the goal is.
That leads me to a really important question because I think as we think about municipal leaders, and you talked about that vision, what they're thinking about, whether it is a water system, a sewer system, um, what should local leaders be thinking about when they are preparing their budgets every year or consider new capital plans and bond issues in terms of their vision and trying to achieve their goal, looking at their CAFRA, all of those things. Just talk generally. I'm gonna make you a mayor right now. Uh, I'm gonna turn you into a mayor right now and say, Mayor McCarthy, what questions, how should I be thinking about achieving my goal?
I think that's a really good point. So there's two broad classes I think that as mayor you want to consider. The first is some projects require raising a tax to pay for the project. So in those circumstances, part of what you need to do is educate the community about why this is important and why they should vote for this particular tax. So that happens on a lot of particular projects, and sometimes the bigger projects have voter approval as part and parcel of what they're doing. The other part is really as a manager of the business. It's a little like, when you're sitting in your house, you say, do I want to get a bigger house and get a mortgage? Or do I want to buy this car or that particular car? As mayors, you're the quarterback of the financial team. And what you need to do is to say, which things are important? Which things can we afford? And where can we raise revenues or effectively spend the revenues we've got to maximize the benefit for the citizens. I think that's the fundamental part. And to do that, it's a really unique mixture of short-term goals on operating expenses and revenues versus long-term goals for a project that you're trying to build. Whether it's a local convention center or it's a school. All these things have a longer time frame in order to get done. The interesting thing about what we do as an insurer is we're sort of like your mom and dad when you graduated from college. So you had a student loan and you didn't have a credit record on your own, and so your parents co-signed that loan for you so you could pay for college. So your parents, just like us, we want you to be successful and make enough money to pay off your student loan. But if you can't, the difference is we step up and we'll make that payment to the bondholders on a timely basis. And our AA guarantee from Standard & Poor's makes a savings happen when you sell those bonds. So if you were going to sell them at 4% on your own name as a single A rated state community, as a AA community, you'll save a 0.5% to a full percent, and that is material in terms of affordability for that particular project.
I think that's a very important note, the cost of repayment in terms of, being able to use insurance or not use insurance, or call us and let us help you think through
That's right.
whether you should have this bond issue insured.
And the other thing that's important to note is that, there's a whole industry that's there to support. Not only does the National League of Cities have resources and gives, really constructive advice to their members, but also there are financial
Mhm.
advisors, municipal advisors, and underwriters or bankers that are going to ultimately sell the debt. And they are available to small communities and to the largest communities in order to help you think through what's the most effective way to achieve your goals in terms of what you're trying to finance. BAM is part of that, but these other partners that you have available to you make up the whole community that enables you to come to market, get a transaction accomplished at the lowest cost possible.
And I'm glad you brought that up. That is a great industry, and they are available to you most of the time, just as advisors.
Correct.
And some are hired, just the FAs are just hired specifically to provide you advice. That's how years ago I got into the industry, and did not get the Series 7. All I needed a Series 63 to provide municipal advice. And it was an eye-opening experience because what it gave me to an opportunity to do as a public servant was to help municipal leaders to achieve their goals
Right.
and go to market and go in a safe and effective way so that they could be able to move their community forward with the mortgage, if you will, or a car payment that they could afford. Uh,
That's right.
yeah, so that's a really good way of explaining that, and I really appreciate. I mean, you and I talked about the vision, but one of the things sometimes we are struggling with outside factors that we don't control in the economy. Um, from your perspective, what are some of the fiscal issues you've been watching from the outside that can impact the market and impact the city's desire to go into the market with the project?
These are issues that affect uh, both large and small communities, and I'll give you a couple of examples. Um, right now, healthcare and what the reimbursement of healthcare is for hospitals um, is changing pretty dramatically. And if you have a hospital in your community, making sure um, you understand how these changes in reimbursement are going to affect you is fundamental. We talked about this a little bit before, but the federal government support, they're basically saying, look, we're a little short on money. You guys are on your own in terms of trying to manage a lot of your essential infrastructure. Well, nobody's better at that really than state and local governments. But the issues that you have to keep in mind in terms of where are we going to raise our revenues and how are we going to effectively, you know, identify a project, get it financed at the lowest cost possible, and to maximize that benefit for the community. Those are all things that change going, as the federal government relationship to state and local governments shifts. Another example of that is pension funds. You know, how much pension, what your pension obligation is, and how that affects your ability to do other things and have financial flexibility is an issue that we look at in terms of credit worthiness and stability of a particular community. So there's a lot of different factors, but more and more these factors are coming back to the state and local government, and the reliance on the federal government for support for these issues is, I would say, unpredictable.
For sure. And I think that's important because most of our leaders, well, I say all of our city leaders, believe in having the ability to make local decisions. Um, to see the partner there as the federal government, but they have to be able to use a tool such as municipal finance to achieve their goals and not always rely on the federal government to provide that support. Let me ask you one other thing. I think it's important. I hear what you're saying. If I was a mayor or a council member sitting out there, they rarely go into the municipal market or they're new to their positions. When they start this process, what should they expect from the FA to the underwriter to the bond insurance companies? What should they expect?
We're usually a little later to the game. So my advice is to take advantage of the municipal bond community. Seek their advice and support before you even decide to go forward with your bond issue. So one of the things that I think is fundamental is to find an MA, a financial advisor that you're comfortable with, or a banker that specializes in municipal finance, because the rules are very particular, and you want to also find a lawyer, a bond lawyer. So if you think about it, every bond issue has to have a bond counsel, and that bond counsel is your advisor in terms of how to structure the transaction. The financial advisor will help you say, this is what your financial position is. I will help you go to Standard & Poor's and Moody's, the rating agencies, to achieve a rating, which will be part of the fundamental part of getting your transaction to market. So you've got a lot of people that are on your side. And quite frankly, I think they're some of the best values in the business in terms of they're charging to help you get that done at, in my view, very reasonable, very pretty low no cost rates. And so you, by asking other mayors or other people who have come to market, say, what was your experience like? Who did you work with? Did you like them? Are you comfortable with them? In each state, there'll be specialized bond counsels that you should, visit with a couple of them and make sure that you've got somebody who you're comfortable with getting advice from in order to bring your transaction to market.
And then the big question, when should local leaders think about bringing and working with BAM?
So BAM, so here's the life cycle of a transaction. You decide you want to build a new school. And so you're going to hire, an advisor to sort of figure out how to structure the revenue stream. How big a school should you build? Do you need one or two football fields? There's a whole issue of that aspect of it. You'll then interview underwriters. So those are, the BAML, Merrill Lynch of the world, or Morgan Stanley or Stifel, who will ultimately serve to not only give you financial advice, but also to bring your deal to market. And at that point, and also to help you walk through the rating agency process, which I spoke about before. At that point, when you've decided, here's our transaction, here's basically what it looks like, now we'll talk to bond insurers. Now, our role is to lower your cost of funding. So once you've established what your credit picture looks like and how what your transaction is, and for us, no worthy transaction is too small or too large. We work on a wide variety of transactions, and in many ways, the smaller transactions are just as tough as the bigger ones because just of the inertia, and they all have the same complexity. So having a team like that in place is appropriate. Now, nobody uses bond insurance without saving money. That's this. So know that if we're going to guarantee your transaction, we're going to lower the cost of debt. Now, remember, municipal finance has the advantage of, for the vast majority of transactions, being tax exempt to start with. That means you're going to start with a lower tax, a lower payment that you have to make than if you had to go to the corporate market. And that's a dramatic thing. And that's why the people who buy tax exempt bonds are a specialized group of people. So they're ultimately investors like Nuveen or Fidelity, or New York Life, or all kinds of people that when you look to buy a fund that's tax advantaged, that is composed of a bunch of municipal bonds. And so that's where those bonds will end up getting sold. And that is at a lower, more tax effective rate for the investor and a lower cost that the federal government lets state and local governments appreciate. That's the real big help that they're bringing to the table, is to lower your cost of funding. And bam, by guaranteeing your debt, lowers it even more.
So, Mayor McCarthy, I got one last question to ask you. Now that you've heard this pod and you've been educated about the municipal bond market and Build America Mutual, BAM, what's your next step in your city? How are you going to use this information?
So as the mayor,
Yes.
I want to prioritize what projects are important to my community. So I'm going to say, do we need to build a new town hall? Do we need better roads? Do we need clean water treatment? Do we need which project? What do we need more power? Which things do I need to deliver to my community that they need the most? And once you decide that, then you decide which project. Then you prioritize those projects, and then you seek to put together a financial equation. But it starts with two things, as I said before. Mayors should tell their story. If you're the mayor, you have to have goals. What am I doing to make my community better, bigger, and stronger? And financing essential infrastructure is a key part of that.
And it's also the beginning of job creation, opportunities for businesses. I mean, there's so many splinters that come out of this vision that one has when they identify a project. And then they have this vision about the project. The next question is, how am I going to finance this project?
Right.
And there's so many options that municipal leaders can look at, but clearly to get it moving, municipal bonding is a real good tool to do that.
And it helps me, the mayor, achieve the goals that I'm trying to serve for my community. And the one thing about BAM that's really important is we're your partner until the last bond issue. So you're going to issue bonds that maybe have a final maturity of 30 years. Now, the reason why they're usually long dated like that is because that matches up with the depreciable life of the asset that you're financing. So whether, a brick and mortar building, that's going to amortize over a long period of time, have value to the community for a longer period of time. And so if you think about that, we're there, you'll go through good times and bad times over 30 years. And our job is to be your partner through thick and thin until the last bond issue is paid off.
And that's the answer to our question. When should you call BAM and why should you call BAM? Build America Mutual is a great partner of the National League of Cities. Um, but Seán McCarthy is a good friend of mine, and I appreciate all the information and education I get about the municipal bond market. And he is so committed, and so is his team. And again, um, I hope that all of the listeners, especially our municipal officials, include our town managers, our finance directors, and the entire utility team, understand that municipal bond sales and the process is important. Who you partner with is more important. And finally, finding you a partner like BAM that can ensure your municipal bond financing is key to a successful process.
And I just want to finally say that, we have been partners with the National League of Cities for 14 years, and it matters. What the National League of Cities is doing in Clarence's leadership in terms of making sure these issues are at the forefront and that we're here to help. Clarence's role during COVID was incredible. And the fight that happens between in making sure that there's funds available for municipalities, state and local, from the federal government, that's an endless fight. Um, and I think our role and the NLC's role are well suited, and I can't be prouder than to be part of the overall infrastructure that and the partnership that comes from being a family member of the NLC.
Well, listeners, I'm so honored to have again on City Speak Seán McCarthy, CEO of Build America Mutual. Thank you so much, Seán, and we appreciate your leadership.
It's a pleasure. I really enjoyed this. And anybody who needs our help and advice, just pick up the phone.
Thank you.
Thanks for listening to City Speak with Clarence Anthony. If you like this show, let us know. Share this episode with your friends and make sure to subscribe. We're curious to hear what you think, what you want more of, and how we can improve. If you have feedback or an idea for a guest you'd like Clarence to sit down with, send us your thoughts at cityspeakpodcast@nlc.org. Join us next month for a new episode. Like and subscribe here or wherever you get your podcasts. See you next time.